fan. This is Greg for Teslafaninsight. We focus today on the lessons from Warren Buffett that are also impacting the market and Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy this show, would like better ideas on investing and trading, please join us on Patreon. So we kind of have a theme going relative to the markets and what's been going on with Tesla. Today's show, I'm actually making an effort to dive further into this whole realm of, number one, theme is what's going on with the market currently. As you can see, we're down pretty heavily. Number two, the main goal of this show is to apply 3 lessons from the handbook that's been developed by our friends Warren Buffett and sort of his staff over time. And then finally, the follow-on to those 2 items is sort of what's next that we expect based on the lessons that we've learned in this process. This is Greg for Teslafaninsight. Thanks once again for joining us. And I just wanted to note that Warren Buffett is sort of not who you think he is. And here's what I mean. As you know, there's something called the S&P. Well, one thing that happened with the S&P is that yes, there's direct investment in the S&Ps, but because it's been so successful to so many people for so long, they've developed a bunch of hybrids off of what you might know about with the S&P. And so there are ways to directly invest in those indices or shadow investments like, for example, technology in the S&P only, for example, that are out there. And so Warren Buffett has become somewhat like that, hence one of the reasons why he's referenced so often by us and by others. As you know, Warren is perhaps the most successful living investor. And there's a famous line in business that says, nobody ever got fired buying IBM. Same concept when it comes to Warren Buffett. Nobody ever got fired adhering to the lessons that Warren Buffett imputes on the markets and on us. So the first thing I'd like to cover today is there are all these numbers bouncing around. It's somewhere between $289 billion and $325 billion worth of cash that Mr. Buffett has on the balance sheet that he's holding, and that could be cash equivalents as well. Now the question is, well, why does that matter? Well, the answer is that if you look at direct Warren Buffett cash sitting on the sideline, that's $300 billion. When you look at entities influenced by the Buffett process, we're probably talking another $100 to $200 billion that shifted into an investment profile comparable to what he's doing. So $500 billion isn't a huge number for an economy the size of the United States or companies within indices like the S&P and others. But in theory, that might be 20-25% of the money out there. And those are direct numbers, not the indirect investing that's happening for a lot of people in that space. So everyone takes him very seriously, and it at least shades what's happening with investments for a large number of entities all over the world. So what I wanted to suggest today, and why I brought this up, is that I watched him make his move to cash in the fall of this past year. And my thought process was, well, why would you do that? Because Mr. Trump has a lot of billionaires, and as he won the election, he has a strong incentive to make sure those billionaires don't lose large amounts of money. So I expected that the continued prosperity America had experienced would continue. Obviously, I was wrong, and doubting Warren Buffett is probably a bad idea, which is illustrated by what I just stated. So as you know, the challenge we're in right now is not that the challenge we're experiencing is policy, size of tariffs. All of these things are changing sort of every 24, every 48 hours. And the challenge that pops up here is, well, how do you invest in that if you have no idea what the policy is going to be and can adjust your investment process in that? And that goes for businesses that have to put capital to work relative to growing their businesses. Also applies to individuals who don't know how many jobs are going to be lost, etc. I saw something today that kind of blew my mind that you may want to look up to confirm, and this is a sidebar, and that is that half of everything that's purchased in the United States is purchased by the government. So there's an inclination for huge budget cuts, which makes sense. The challenge, though, is if the government is buying half of everything and the companies selling those products are often American firms, then we could actually see an increase in unemployment relative to entities no longer selling products and services to the government in that process. So we not only have the layoffs happening, we also have, jobs. I know this number in the case of automobiles, for example. There are 7 jobs attached to every person that works in the auto industry. I would not be surprised in the government services space if there aren't 3 or 4 jobs per, meaning the lawyer, the doctor, the car wash person, the grocery store. There are all these entities that are indirectly attached to these, job or no job within the U.S. government. So I'm kind of bringing this up today because one of the issues that I raised a few shows ago was that I really think that we're in the mode right now to actually find out, well, once we stabilize on what the Trump policies are going to be, business and everyone else can embrace that stabilization and therefore know what to do in the short and long term and how their investments might be impacted. It's my belief that until we are able to get sort of stable long-term investors like Warren Buffett to come back into the marketplace, we're stuck in this zone where most people are trying to figure out, do they run for the hills that are close by, or do they run for hills that are a long distance away to protect their investments and portfolios? The answer right now is that I feel like we're in what I call an experimental zone right now, where Mr. Trump is laying off different people, trying out different size tariffs against allies and non-allies, and coming up with his overall plan and strategy heading into the future. And so it feels as though he kind of doesn't know what the actual plan is going to be. And that's definitely the case with the marketplace, that the market doesn't know what his plan short and long term is going to be either. And while that's occurring, we all end up in a zone where everyone's wondering what's going to happen. And the more uncertainty we see, the less anybody wants to be invested. The final item I wanted to review today is less so affiliated with Mich. So when it comes to people like Warren Buffett, the answer is fact-based, research-based plan and strategy is what he likes to be affiliated with, and so do other large investors for the long term. When that's not the case, not only are people like him exiting the S&P because they know all those companies are going to be damaged by this, but they're literally sitting in cash or cash equivalents waiting to find out which way the wind is going to blow, because it's entirely possible that you could take a few weeks or a few months and completely destroy an economy, which seems to be the path that we're on currently. And hopefully we can sort of find some stability in a reliable process that is attached to stuff that makes sense going forward. So the answer that I'm coming up with, based on training from studying Mr. Buffett carefully, is that, oh yeah, he will definitely be back in the markets in the future. Is it now? No way. When will that happen? When there's a reliable illustration of what the plan is and an understanding of the outcomes that that plan might have. So overall, I would say one of the other challenges here is that when it comes to the S&P, directly or indirectly, entities like Tesla and others are companies impacted by how well the economy is doing. So if the economy is doing horrible, it's hard to imagine people buying Teslas or buying anything, big ticket items, and fear is the norm in that space. So once again, I want to thank you for joining us. This is Greg for Teslafaninsight. The final note that I wanted to make is I did my 20-minute walk this morning. Wanted to encourage you to consider the same every morning. Also wanted to encourage you to consider 20 leg lifts a day as a way to strengthen calf muscles, reducing the chance of knee operations, etc. going forward. Once again, thanks for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, lehitro, hodaha festrasiche, ni hao ma. In Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.